AI requires a lot of compute power, and the cost for your AI workloads can spiral. That is, unless you're running on OCI, Oracle Cloud Infrastructure. This was the cloud built for AI, a blazing fast, enterprise-grade platform for your infrastructure, database apps, and all of your AI workloads.
Right now, Oracle can cut your current cloud bill in half if you move to OCI. Minimum financial commitment and other terms apply. Offer ends March 31st. See if you qualify at oracle.com/WSJTech. Oracle.com/WSJTech.
Good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson. Now at 3 o'clock here at 790 KBC. And we do all this just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air on 790 KBC, streaming live worldwide at KBC.com. And, of course, the on-demand Mottek On Money podcast, KBC.com, Apple, iTunes, YouTube, all your favorite podcast platforms. Stocks did move higher on this Valentine's Day Eve today. Looks like Cupid's arrow hit Wall Street early with the Dow up 343 points today. The S&P 500 up 63 and the NASDAQ coming back to life, up nearly 300. The price of gold flirting with record highs today, right now at around $2,960 an ounce. Stocks moving higher today after President Trump announced plans to introduce reciprocal tariffs, but delayed their implementation. Investors digested a new report suggesting inflation is once again heating up. The consumer price index came in hot. Today we got the producer price index after the hot consumer inflation print, and that dented optimism for an interest rate cut by the Federal Reserve, perhaps for all of this year. Speaking of inflation, if you haven't noticed yet, it's not too late, though, to buy chocolates for your Valentine. Be prepared to pay more than you did last year, as chocolate and other candy continues to go up in price due to the high cost of cocoa. A recent survey by the National Confectioners Association shows that 91% of Americans will celebrate Valentine's Day with chocolate and candy. Nearly half of the folks in the survey said they will buy a box of chocolates just for themselves. Now, consumers are expected to spend a record $27.5 billion on Valentine's Day this year, according to the annual survey released by the National Retail Federation, and that amount is higher from last year's $25.8 billion and slightly above the previous record of $27.4 billion. Earnings season continues. We see the earnings parade continuing today. Looks like Robinhood shares soared on its fourth quarter profit, beating expectations after the bell yesterday. We see Meta closing higher for the 19th session in a row. Meta of another $3 today to $728.56, hitting record highs. Also, MGM Resorts International taking the spotlight. Fourth quarter earnings beat analysts' expectations after getting a boost from China. The casino resort operator said it was encouraged by demand so far in 2025. We see MGM shares of 17.5% today, up $6 to $40 and change. On the flip side, West Pharmaceutical Services stock plunging 33% today after the maker of injectable pharmaceutical packaging and delivery systems offered guidance for this year that was well below analysts' expectations. West Pharmaceutical shares plunged $123 and change to $199.11, a drop of 38%. Gold prices climbing on the latest news. Right now, gold is up about $14 at $2,959.30 an ounce. The economic impact of the Southern California firestorm still being calculated. The disastrous spate of wildfires last month leveled thousands of homes and businesses. I'll discuss the economic impact of all this with Kevin KLOWDEN, prominent economist here in Southern California, executive director at the Milken Institute. He's a expert on the Southern California economy, also the lead author of numerous publications. We're looking forward to speaking to Kevin KLOWDEN live later this hour. Tariffs imposed on products from China, very much in the news these days, and President Trump says he wants to restart nuclear arms control talks with both Russia and China, that eventually he hopes all three countries could agree to cut their massive defense budgets in half. We'll discuss that and other news related to China and the geopolitical scene with Gordon Chang, China expert and author of The Coming Collapse of China, The Great U.S.-China Tech War, numerous other books, as well as on X, formerly known as Twitter, at Gordon G. Chang. But first, on your money, the markets, the economy, gold, inflation, crypto, the whole works now. With us live, Jonathan HOENIG, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan HOENIG, good afternoon to you, sir.
Frank, great to be with you. The irony is they say that the market hates uncertainty. We've said this for years. The market hates uncertainty. The market hates uncertainty. Well, now we have a whole policy of uncertainty, particularly around tariffs. This is now the buzzword, Frank, being mentioned on nearly every annual report, every report to shareholders, and for good reason. I mean, look, President Trump has ambitious goals. He wants to stop the flow of drugs. He wants to stop undocumented migrants. But he's throwing out these tariffs, Frank, that have very real-world implications onto companies and to consumers. I saw one study this week that said if enacted, these tariffs could add about $6,000 onto the price of an average car, lifting it over $50,000 for the cost of a brand new car. So, lots of uncertainty, and unfortunately, the tariff policy is at the middle of it.
All right, inflation certainly making news this week, coming in hotter than expected. The Consumer Price Index and now the Producer Price Index, which measures inflation at the wholesale level, also coming in hot today. And tariffs have been mentioned as a possible cause for inflation moving forward. We've seen gold hit record highs, and that's been a hedge against inflation. That is quite significant. What do you see ahead on the inflation front and your reaction to the latest inflation news?
We talked about this last time I was on your program, Frank. In the mid-1970s, Ford thought they had inflation licked. I think interest rates came down from about 9% to 7% in the mid-1970s. Yet they kept spending, and inflation reared its ugly head way into the 1980s, which saw interest rates ultimately hit double digits. Look, you've got 2/3 of all U.S. vegetables come from Mexico. 1 in 5 cars come from Canada or Mexico. 99% of the shoes that are worn in this country are imported. It is a global economy, Frank. And, again, the president throws out 25% on this and 10% on this. You've got whole industries who are based around low-cost imports. So, again, he's got some ambitious goals, but Bastiat, the economist, told us that, there's no such thing as a free lunch, and someone's going to be paying the cost for all these tariffs, and the economy certainly is going to be at the center of it.
Speaking of lunch, or maybe more appropriately breakfast, egg prices soaring. I know someone you interact with frequently, Steve Forbes, got a chuckle on this program when I asked him if he thought the Fed chairman had egg on his face with the latest inflation number, with egg prices soaring, of course, with this unfortunate bird flu causing this crisis with the chickens and the eggs and all of that. But what about these prices? What about the Fed's next move on interest rates, which may not happen until the end of the year, and it might be ticking interest rates higher, right?
Well, the egg situation is pretty disastrous. Although it's really not an inflation phenomenon, Frank. As you know, there's been a bird flu. They've had to extinguish a huge part of the flock. People like a 3 or 4 egg omelet. Prices go up, and demand stays the same or goes down. Or supply stays the same or go down, and you have prices go up. And that's why many of the breakfast restaurants now are adding a 50-cent per egg surcharge when it comes to those. The fact is that, Frank, even though that the interest rate has come down, even though inflation has come down, everyday Americans are still feeling it. And I think that's why the tariff war and the trade war might be coming at just the wrong time. You're already seeing Canada leveling a 25% tariff on beer and imports and fruit juices that Americans sell to Canada. So, it's that uncertainty, tit for tat, tax for tax, tax for tax, that I think is really worrying a lot of American investors. And I have to tell you, Frank, what's working now in the markets are foreign stocks. I know I sound like, a heretic for saying this, but foreign markets are outperforming U.S. shares so far year to date, and that's where I'm putting my money to work. Foreign shares over U.S. shares in 2025.
Very interesting. We'll drill down in some of the details of that. In the meantime, it's hard to ignore gold kissing record highs again this week.
Yeah, all-time highs mean more all-time highs. And just the same way gold crept up nearly every year from 2001 to 2012, was up higher last year. And to tell you, Frank, I also like platinum. You always want to do your own due diligence. You've got some of the smartest listeners in radio, and I know they always do their own due diligence, but check out PPLT. That's the ETF that tracks platinum prices. And, if platinum had kept track with gold in terms of keeping up with inflation, it's currently about $1,000 an ounce. It should be about $3,000 an ounce. And because a rising tide lifts all boats, I like gold and I like platinum at these levels as well.
All right. And have cryptos gotten your attention these days? Looks like Bitcoin, of course, saw a wild ride, hitting record highs after President Trump was inaugurated. Right now, taking a look at where Bitcoin stands here at the moment, around 96,000, Ethereum at around 2,668, and Doge now at 26 cents. So what are your thoughts on the crypto space here?
Well, Frank, I've started to watch it closer now, especially given the fact that Trump seems to have put in so many crypto-friendly advisors into his panel. Ethereum is the most interesting to me, and it's been actually the weakest. Over the last 6 months, Ethereum is actually down by about 1.5%. So, I'm not putting a lot of new money into Doge just yet, into crypto just yet. I think if you're sitting on a winner, stick with that winner. But, I'd like to see new highs. That's my best indicator. When a stock or an asset, Frank, hits new highs, most people's attitude is to say, oh, I can't buy it there. It's at an all-time high. But that's the best time to buy it. I mean, that's when the market itself is telling you it's looking for even higher prices. So I'm content to sit on a crypto just now. If it starts to hit, 105, 110, 112 in Bitcoin, then the bull market's on.
On the air live with Jonathan HOENIG, who is the Fox News contributor, also a portfolio manager at Capitalist Pig Hedge Fund, author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Speaking of record highs, look at Meta, the Facebook parent company, soaring again today of another $3 at $728.56. What about Meta in this record run?
It seems to go up day after day after day. I'm impressed with that, Frank, but I'm also impressed with some of the lesser-known names, like for example, Banco de Chile. I mean, this is not one that's on the lips of many, many Americans, but a lot of the bank stocks are doing very well. And BCH is one that I own over at capitalismpig.com. Another European bank is DNBBY. Same thing, undervalued relative to U.S. assets. And I think you're going to see a lot of that this year, Frank. If you will, a little bit of sanity come back into the marketplace. AI is the future. We all know that. But I think 2025 is going to be a year in which your valuations become a little bit more realistic. And a lot of the value-oriented stocks, stocks hitting new all-time highs this week include AT&T. Remember that old chestnut?
T.
Orphans. So AT&T, good old Ma Bell.
Right, the ticker symbol T.
Ticker symbol T, exactly. So I think now is the time to look for some of these less sexy, off-the-radar screen names. And in particular, I've been impressed with the foreign stocks. It doesn't make you a bad American to invest internationally, Frank. Oftentimes, some of the best returns have come overseas. So I'll give you one more if you really want to span the globe, and that is AFK. AFK is a ticker that tracks a basket of African stocks. Plenty of risk, but also plenty of return when you think about the natural resources and the potential for liberalization of that entire continent. So AFK is one that I think is a great opportunity. Always want to do your due diligence, but cast a far and wide net in 2025.
And you're certainly right to point these other countries out, including Germany. The DAX index hit a record high in the past week or so on expectations that perhaps there is some progress in some sort of a peace deal between Russia and Ukraine. That certainly has also impacted the oil markets this week. And speaking of that, what about the oil names here with oil pulling back to around $71 a barrel now?
And I'll quickly mention, Frank, isn't that interesting? The DAX is hitting an all-time high even as Europe's in a recession and Germany is in a recession. And part of the reason I emphasize in price is primary to follow price is because that's the story. That's what we trade. So that's just such an irony of, Europe, Germany's in a recession. Meanwhile, the stock market goes up and up and up. So that's what we're keeping a close eye on. I actually have I think a great energy play for you It's a value name. It's also a European name. It's ENOR. ENOR. That's an ETF that tracks the Norwegian stock market. This is one of the biggest values in all of Europe. My last recollection is of a dividend yield of north of 5% and a PE ratio less than 10%. So this is a good old-fashioned cheap market with a lot of energy exposure. So if you do believe that we are in an inflationary period, ENOR is a cheap way to get exposure that isn't on everyone's tongue. And, it's tough to be a contrarian, Frank. It'd be so easy to come out here and talk about Meta and Facebook and, all the same names that everyone talks about. But, I do my due diligence to get the hot names that are going to be talked about 6 months from now. And that's what makes the contrarian a lonely but ultimately profitable road.
Appreciate that very much. We're on the air live with Jonathan Hoenig. And what about NVIDIA, which, of course, took that big hit a couple of weeks ago when that DeepSeek news came out? It's rebounded now another $4 to $135 and change. Apple, with some new product announcements expected, moving higher today by nearly $5 at $241 and change. Remind me, what are your thoughts about the Mag 7 at this time?
Well, I mean, these are, they're an investment idea now that has its own branding. It has its own bevy of mutual funds supporting it, and it's the type of name now, Frank, that's trading. It's not just popular; it's trading at such an extended valuation relative to other parts of the market. You fans of yours and has known that you followed the market for many, many years, and as we remember times in which, for example, small cap stocks traded at huge premiums to large cap stocks, or foreign stocks traded at huge premiums. We're not at that period now. We have been in this period where these Mag 7 stocks, these large names, have dominated for years. I simply just don't think that's always going to be the case, especially now that they've just become such a dominant part of even the S&P 500. So, NVIDIA, wonderful company, but so is Cisco Systems. And I think of NVIDIA very much like Cisco Systems in 2000. It took about 20 years for Cisco to regain that level because the technology worked, but the valuation needed that time to grow into it. So I'm not a hater, but I think I'd rather own GXG, Columbia, than NVIDIA at these levels.
Terrific. Well, Jonathan, thank you very much for, again, your thorough analysis of things here. Once again, with so much going on an hourly by hourly basis. That is Jonathan Hoenig, Fox News contributor, portfolio manager at Capitalist Big Hedge Fund. And the book is Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan, we wish you a great holiday weekend. We got a 3-day weekend coming up here. So thank you very much for taking the call here this afternoon.
Best to be with you, Frank. Thank you.
Thank you very much. And out to the freeways now on this rainy afternoon on 790 KBC. Mottek On Money continues on 790 KBC. Good afternoon. Hope everybody's staying safe out there in this latest storm. The Dow higher today by 343 points. We're at 44,711. The S&P 500 up 63 at 6,115. And the NASDAQ up nearly 300, up 296 at 19,946. Price of gold popping up nearly $14 at $2,959.30 an ounce. Silver also on the rise, moving above, looks like above $33 an ounce now, up 30 cents. And let's pull up platinum here, up $5.50 at $1,048.70. Among the movers today, shares of Resorts International, MGM, up 17.5%, up $6 at $40.37 a share. Meta popping more than $3 at $728.56 as that stock continues on a roll. The parent company of Facebook, NVIDIA shares up more than $4 today, rebounding to $135 and change. Apple up nearly $5 today at $241 and change. New readings on inflation today with a gauge of wholesale prices higher than expected in the month of January. The Producer Price Index came out an hour ahead of the opening bell this morning. That's the one that measures inflation at the wholesale level, what producers get for their goods and services. Up 0.4% for the month of January, higher than expected, excluding food and energy. The so-called core Producer Price Index was up 0.3%. That was in line with analyst expectations. This is a day after the Consumer Price Index came in hot, with that index moving up to 3% over the past 12 months, making it less likely that the Fed will be lowering short-term interest rates anytime soon. See if we can bring up some of the cryptos here now, which have been all over the place. Let's bring up, let's talk about Bitcoin for just a moment. See if we can bring up the latest here on the cryptos. Bitcoin at the moment up about 600 at 96,889. Ethereum up 8 at 2,675. And Doge at the moment at 26 cents. And now the latest news for you here in 790 KBC. Mottek On Money continues here in 790 KBC. Good afternoon. The economic impact of the deadly firestorms in Los Angeles still being calculated. And with today's biggest storm in a year possibly setting off rock and mudslides, possibly compounding the disaster, the latest estimates of the total economic loss from the wildfires last month have now hit about $250 billion. The firestorm last month leveling thousands of homes and businesses in the Pacific Palisades and the Altadena area, as well as other areas of the Los Angeles area, changing the course of people's lives and disrupting the economic balance of major industries all across the area. Let's bring in prominent economist Kevin KLOWDEN now. Kevin KLOWDEN, an executive director at the Milken Institute Finance Department. He's an expert on the Southern California economy, works closely with various business groups, including the LA Area Chamber of Commerce. Kevin KLOWDEN, also the lead author of numerous publications, including A Hollywood Exit, What California Must Do to Remain Competitive in Entertainment and Keep Jobs, another big issue here in Southern California. Kevin KLOWDEN, thank you very much for coming to the line here this afternoon.
My pleasure, Frank.
Wonderful to have you with us. It's been a while since we chatted behind live microphones. Certainly hope you and your family and the entire Milken Institute family have come through this disaster area with as best as possible. Give us your view of this epic disaster here and the economic impact.
Well, the biggest single impact, more than anything else, is what it's going to do to housing. One of the biggest problems that we already faced even before the fires was the fact that there weren't enough homes, they weren't affordable enough, and we were already seeing all of these pressures that were going on in terms of increasing costs from insurance. We've heard a number of stories about insurers either canceling policies. In fact, there's a number of stories about cancellations of policies for homeowners in both the Palisades and Altadena over the summer before the fires hit. We're also seeing the fact that some insurers want to move out of the state. And there's been a recent report that the insurer of last resort, managed by the state, is going to be out of money. So all of those factors affect the ability of people to find a home, afford insurance, and that's not even counting everybody who is displaced and how much of an impact that has on people in terms of their livelihoods and trying to decide whether or not they're going to rebuild, not just homes, obviously, but businesses.
On there live with economist Kevin KLOWDEN at the Milken Institute. And what is your expectation on how this rebuilding process will take and how this will go?
Well, it's going to be complicated. The first thing that's really going to hit is, as you just pointed out, the rains. For people may forget, decades ago, there was a series of fires in Malibu that were followed up by some of the worst, wettest rains that we had the following winter that took place, and the Pacific Coast Highway was repeatedly closed down due to mudslides. Well, because these fires took place in winter, we don't even have to wait. The rains are now. We're seeing some of the impacts right away, and so you need to assess, are these homes safe? Are these locations safe? What are the impacts of suddenly having all this vegetation gone in a number of these vulnerable areas? And once we get through that, we have to assess and rebuild. And there are already reports about the Army Corps of Engineers and whether or not they're going to do toxicity samples. Are they going to figure out what kind of other issues have happened, in a world of rechargeable vehicles, both hybrids and full electrics, and what happens if you had any of the fires and the batteries there? What happens with a lot of modern electronics and equipment? And are these places safe to be rebuilt at? And we have to go through that before we can even do the real rebuilding. The good news is that everybody in power, well, with the possible exception of the Coastal Commission, wants to see rebuilding happen quickly and as quickly as they can finance it and manage it.
And now we have these efforts. Steve Soboroff, who ran for mayor years ago, by the way, selected by Mayor Bass to to lead one of the main recovery efforts. He also was involved with the development of Playa Vista years ago. We also have Rick Caruso, who has created a Steadfast LA, a foundation to help with the rebuilding as well. What are your thoughts about these efforts?
I think they're necessary. The fact is that we need both public and private capital. We know that we're already seeing pressures in Washington to cut back or eliminate the Federal Emergency Management Agency, FEMA. We have to see about, is there going to be enough money coming to California from the federal government in terms of rebuilding, let alone what are the resources of the state? And as we talked about, the current status of insurance and how long it's going to take those claims. We need the private sector and people who are really good at building stepping in, whether it is Rick Caruso, whether it's Steve Soberoff, whether it is a number of others who have talked about getting involved and building coalitions to do this work. And we need the city of Los Angeles and the county to actively allow these partnerships, and we need the state government to basically override a lot of the California Environmental Quality Act, the CEQA restrictions that might otherwise block a lot of this quick rebuilding. Fortunately, they've been inclined to do that, and as I said, most of the parties, at least at the state and local level, seem to be really eager and invested in collaborating.
On there live with economist Kevin KLOWDEN at the Milken Institute, assessing the economic impact of the fire disaster here in Southern California. Now, indeed, another disaster unfolding with mudslides and so forth in this latest storm. And a lot of people out of work as a result of all of this, with the loss of many businesses. And tell us more about how so many people have lost their jobs in the Palisades as well as Altadena because the businesses have been simply wiped out, and people that worked in these homes are also out of work now.
It's a huge problem, and we're talking about very long-established commercial districts, both in Palisades and in Altadena. We talk about some homes, not being gone, but you look at some of these restaurants, you look at some of these old businesses, some churches, some other institutions that have been in these communities that were anchors, not just in terms of the sense of the community, but for the economies. And there isn't a way to rebuild them, even where Rick Caruso and his shopping district in the Palisades, where some of that has actually managed to survive. There is a real problem in that even if the businesses are able to reopen, where are the customers? Where are the people who are going to shop there? Where is the vibrancy of this area? And it can take years. This is the equivalent in many ways to war damage in terms of a whole area being wiped out and having to do a complete reconstruction of the community. And there's concern about a number of people who are unemployed, especially people who also lost their homes, making the decision to simply leave, that they take whatever money, whatever insurance they get, and they go somewhere that's more affordable, whether it's another part of California or even leaving the state.
On there live with economist Kevin KLOWDEN. This at a time we started the year on the red carpet. The Golden Globes kicked off the Hollywood Entertainment Award season, and a lot of focus of attention that I know you've been covering as well, the business of show business coming off the strikes just about a year or so ago. What do you see ahead for Hollywood and the recovery here still from the strikes?
Well, it's a tough combination to have the fires, which we know about its effect on a number of stars and higher profile people in the Palisades. But, a number of people in entertainment were in the various apartment buildings and condos, and a lot of the smaller homes in Altadena. They've been displaced, and that's a factor. But the real issue, even before that, is the fact that with the uncertainty of the revenues around streaming and the pressure that basically hit a bunch of the studios, especially with the way that they've been acquired, refinanced, and so on, they're really looking to cut costs. And LA is expensive. And as we talked about, housing in LA is expensive, real estate is expensive, a number of the ways of actually filming. And so the state's looking at right now expanding the film incentive that's being proposed and is open for debate. But even beyond that, that won't kick in until the beginning of July if it happens, let alone a couple other changes to the incentive program. But the other issue that everybody's looking at right now is that it's not just that Hollywood has been leaving California. They've been leaving, films are leaving the United States in like a larger scale than we've seen in very long time. And when you combine that with the cutback of filming from sort of peak TV that happened right before and then right after the pandemic, we're looking at an industry and a lot of people in it in LA who are hurting. And so the key is for Hollywood is how does it come back, and how does literal Hollywood, Los Angeles, the entertainment industry here, get people back in place to restore the economy. And there are a lot of different parties around the LA area and up in Sacramento and throughout California who really want to see this happen. But it's become even more urgent in the wake of the fires and everything else.
Kevin Clouden, thank you for your laser focus on the Los Angeles area economy. We will keep an open line to you as this recovery continues. That is prominent local economist Kevin Clouden, of course, internationally known, executive director at the Milken Institute, finance expert on the Southern California economy. Kevin Clouden, also the lead author of numerous publications. Be sure to follow him on social media as well. Kevin Clouden, thank you very much for coming to the line here this afternoon.
My pleasure, Frank, and to everyone, please stay safe in the rain.
Thank you very, very much. And let's get right out to the freeways now and check your drive here on 790 KBC. Frank Mottek here. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Well, now with the U.S. debt of more than $36 trillion and climbing, concerns about the economy and the development of the digital dollar, central bank digital currency, it's more critical now than ever before to safeguard your assets like your cash savings and retirement accounts with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Stop worrying about your retirement in the markets and cash savings in the bank. Feel confident, prepared, and in control with physical gold and silver. Give Joe Morgan a call now at 1-800-753-8534 and mention Frank Mottek. You could get $1,000 worth of silver with a qualifying purchase. Call now, 1-800-753-8534 or visit UnitedGoldGroup.com. Mottek On Money continues here in 790 KBC. President Trump announcing reciprocal tariffs across the globe. Of course, China very much in the mix on all that. Tariffs imposed on products from China very much in the news these days. The president also says he wants to restart nuclear arms control talks with Russia and China that will eventually, he hopes, all three countries will agree to cut their massive defense budgets in half. Let's bring in Gordon Chang now, China expert, author of numerous books, including The Coming Collapse of China, The Great U.S.-China Tech War, and on X, formerly known as Twitter, at Gordon G. Chang. Gordon Chang, thank you very much for taking the call here this afternoon, and give us your reaction to the latest news here.
Well, I think it's really important that we do impose reciprocal tariffs on other countries. A lot of people are going to say, well, this will make the U.S. economy less efficient, will be less prosperous, and that'll also be true of other economies around the world. But the important thing here is that we need resilience right now because we're in a world which is entering a very turbulent phase, and we've got to make sure that Americans can manufacture without other countries. So we need to build our manufacturing sector back again, and we'll have to do that behind big tariff walls. So that's important. In terms of nuclear weapons talks with Russia and China, good luck with that, President Trump. Problem is that Russia has violated every nuclear arms agreement we have had since the Cold War, and China has just violated every agreement that we've had with them. So I don't know how you would have a verifiable agreement with both Moscow and Beijing. And although it sounds nice, I just don't see it in the cards.
On the live with Gordon Chang, a China expert. And what about energy? We've been seeing the price of oil tank lately on expectations that perhaps there could be some kind of a peace deal worked out soon between Russia and Ukraine. Of course, there's also nervousness about what's happening in the Middle East with that noon Saturday deadline approaching for the hostages to be released. China also in the mix in all of this. So what are your thoughts on the energy front?
Well, you have the new Secretary of Defense, Pete Hegseth, talking in Europe yesterday. He's talking about the redeployment of troops from Europe to our southern border and to China. And that, of course, will reestablish deterrence. But the other thing that Hegseth said was he made critical concessions to Russia, saying that Ukraine could not join NATO and that Ukraine would have to give up significant portions of its territory to Russia. I'm afraid that the Chinese heard that and said the United States is not willing to defend a country against a clear case of aggression. And so I think Xi Jinping might think that we would not defend Taiwan, the Philippines, Japan, or whatever. So I think that Hegseth's comments, unfortunately, raise the possibility of new war in East Asia.
Very interesting. And what about natural gas also in the picture here?
Well, LNG is really important. China slapped 15% tariffs on U.S. LNG. That went into effect Monday. And people were saying, well, that will prevent the U.S. from financing new export terminals. I don't think that's the case because China only bought 6% of our LNG exports last year. And besides, our LNG is the cleanest in the world. Everyone will want it, especially as we move to an energy-starved planet. So I think that this is going to be good, that we are going to be exploring more, drilling more, and selling more abroad. Because when Americans drill for profit, we are also drilling for peace, stability, and freedom, because President Trump will use export sales for leverage over other countries.
And on the tech front, ever since that DeepSeek news hit, the tech sector was rattled. What's some of the other fallout we've seen over the past couple of weeks?
Well, we've learned over the last week that DeepSeek had hidden code to transfer data to China Mobile, which is a sanctioned company because of its links to the Chinese military. So that is disturbing. Also, I think we've learned about the rollout of DeepSeek seems to have been orchestrated by the Communist Party as sort of a propaganda blitz, not only to tout Chinese technology, but also to hurt American companies.
Gordon Chang, thank you very much for joining us live here. That is Gordon Chang, China expert, author of numerous books. His latest, by the way, is Plan Red, China's project to destroy America. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money, 790 KBC.
The Bigger Pockets Podcast Network is your home, get it, for real estate investing.
I am very tired of people saying that your primary residence is not an investment.
Get real talk from real estate pros about investing strategies that work.
I bought a house for $1 and it makes me $1 million.
You can become a real estate millionaire over the course of like 5 or 6 years.
No one needs a stock. No one needs cryptocurrency. They need a house.
Bigger Pockets. Follow and listen on your favorite platform.